Hey, good morning, it's Owen Bigland. This is the Inside Edge video blog. Time for my much anticipated predictions for the 2016 Vancouver real estate market. If you've been a watcher of my blog for the last 5 years, you know every new year in January or February I do my predictions for what I foresee happening in the lower mainland real estate market. But if you've been watching my past year's updates on this, you know that I will never get into what the market is going to do in the short term, because nobody knows what the market's going to do later this year as far as prices. I can tell you that I've always said that in the long term, when you take it out 8, 10, 15, 20 years, the price you pay for that condo, that townhouse, or that home is going to be far greater 15, 20 years down the road. That I can guarantee. It's a moonshot. All you need to do is look at 30 and 40-year graphs of the lower mainland real estate market. There's small dips in the short term, but in the overall graph, it's like a mountain. So it's always going to go up. Supply is limited, demand keeps going up every year. For that reason, you're always going to have increased prices over the long term. In the short term, though, anything can happen, all bets are off. I mean, nobody saw what happened in 2015 coming. We had anywhere from 15% to 40% price increases. And I can tell you that just so far this year, we're in February now, just in the last 6 weeks, I can tell you that detached homes in Richmond, Eastside, Vancouver are probably up another 8 to 10% just in the last 6 to 7 weeks. It's crazy. So moving forward for 2016, what do I see? So I think for prices to eventually start to level off or come down, or we're in a strong seller's market, to get into more of a balanced market, or even eventually to go into a buyer's market, which always happens, folks. Markets go up and they go down. You get strong buyer's markets, you get into a balanced situation, and then you get into strong seller's markets. We're in a strong seller's market right now. Back in early 2013, we were in a strong buyer's market. So for the current conditions to change, where prices are going up week over week, month over month at a pretty quick pace, we're going to need a catalyst to happen, like you always do in any market, whether it's real estate or the stock market. So I see three catalysts that could possibly cause the prices in Vancouver to at least start to moderate or balance out a little bit. The first one is an interest rate hike. Interest rates are at historic lows. You can lock in a 3-year term right now at about 2.4% if you're a well-qualified client. Let's face it, that is what I've been saying for the last several years. It's really what's driving this market is the low interest rates. And as long as they stay low, the market is going to continue to go the way it is right now. So all I can do is go online, have a look at what mortgage brokers say and economists. It doesn't look like the cavalry is coming anytime in the near future as far as an interest rate hike. These interest rates, it looks like with our economy, which is bordering on a recession, let's face it, with oil prices the way they are, it looks like interest rates are going to stay low for some time to come. So I don't see an interest rate hike, at least nothing dramatic, where we would need to have an interest rate hike of at least 1 to 2% to do any damage to the current price increases right now. So interest rates, I'm going to scratch that off the list in the near future. I don't see that happening. We need to have a much bigger increase in the inventory levels. I've been blogging about this since last fall. Inventory levels still continue to stay at all-time lows. I've never seen a market like this. The reason being is that sellers don't want to be buyers in this market. I've got a lot of clients that I've been talking to over the last year and a half that are interested in selling, but they don't want to sell their home and then have to get into the market to buy something, whether they're upsizing or downsizing or whatever. Sellers don't want to be buyers in this market, so they're hanging tight. And what that creates, it's a self-fulfilling prophecy now. Lower inventory, high demand, low interest rates, the prices continue to spike. So what do I see on the horizon here? I mean, we usually get an increase in listings in the spring. Late February, early March, April are our busiest times for real estate. Time will tell if we do. Right now, inventory levels are still low. So we would need to get these inventory levels up substantially, 40-50% more homes for sale before it could have a bit of a mitigating effect on prices. So that's the unknown. The other final catalyst I see is some unknown new tax or restriction on foreign buyers. There's a whole bunch of them. There were some UBC professors that got some traction here a month ago calling for a vacancy tax, a tax on foreign buyers, a speculating tax, which Mayor Gregor Robertson has been trying to petition for a while. People need to realize that we've already got a speculator tax out there, and it's a hideous one. It's called capital gains tax. If you buy a house, fix it up, put it on the market 2 months later and make a $100,000 profit, 50% of that gain, that $100,000, is taxable at your marginal tax rate. We've also got something known as the PTT, the property transfer tax. 1% on the first 200, 2% on the balance. That has to be paid up front to the government with every home purchase. So we are already the most taxed jurisdiction in North America, if not the world, when it comes to taxes. Capital gains tax, property transfer tax. Now, there could be another unknown one out there, who knows? These professors were calling for a vacancy tax. I mean, talk about an unwielding tax. How would you even enforce something like that? I mean, I know people that live in Southern California. They have homes in Falls Creek, in Cole Harbor. They come up here for 5 or 6 weeks in the summer. They come up here for another couple of weeks in the winter. The rest of the time the house is vacant, but they're not looking to rent it. It's a pied-à-terre for them, a second residence. And you want to add another tax to that, I think we would be the only jurisdiction in North America that would have a tax similar to that. So I don't really see any new taxes other than the already onerous taxes we've already got in place for speculating. Now, the final thing is there could be some other unknowns here. What the oil price does if it continues to stay low. There's all kinds of economic factors that could play into effect. But we need a catalyst, something major to happen for this Vancouver market to stop its current run. Eventually it's going to happen. I've been saying in my blog, I'm not like some people will say real estate, you buy it and it goes up forever. As people that know, watch my blog, I'm always telling people that real estate goes in good runs. It can go on a run and a tear for 3, 4, 5, 10 years. But eventually it comes it starts to level off, and eventually it'll go down. We'll get into more of a balanced market first, and then finally into a buyer's market. The problem is the market could go up another 30 or 40% here before we finally level off and maybe get a 15 or 20% correction. But those are the three catalysts. One of those three, or a combination of those three, would need to happen before we would see the real estate prices here start to level off or even possibly go down. I'm Owen Bigland. As always, thanks for watching. I'll see you next time.